The company behind the Nord Stream 2 gas pipeline may file for insolvency amid international sanctions. That is according to two Reuters sources. Nord Stream 2 AG was sanctioned by the US last week ahead of Russia's invasion of Ukraine. The firm is based in Switzerland and owned by Russian gas giant Gazprom. It was supposed to double the capacity for pumping Russian gas to Germany, but the project has been politically contentious since it was conceived. Washington says it would make Western Europe too dependent on Moscow for energy supplies. Germany has now halted approval for the pipeline. The two Reuters sources say Nord Stream 2 AG could begin insolvency proceedings in Switzerland as soon as this week. Gazprom paid half of the cost of the $11 billion project. The rest was covered by Western oil firms including Shell and Austria's OMV. Workers on the project are having their contracts terminated. It's not clear how the pipeline will be maintained. Global supply chains were already struggling with soaring prices. Now a slew of flight bans connected to the Ukraine crisis is likely to make things a whole lot worse. Transport between Europe and Asia looks hardest hit, with airlines having to cancel or reroute flights between the regions. Longer flights means more fuel used and higher costs. Carrying more fuel also means carrying less cargo, again driving costs higher. Back in December, air freight rates were already 150% above 2019 levels. Shipping container shortages and port bottlenecks led to a surge in demand for air freight. Now cargo prices look set to go yet higher, and sanctions on Russian airlines won't help. Airbridge Cargo, based in the country, is a major player in shipments from Asia to Europe. All told, experts say about a quarter of the usual air freight between the two regions will have to find alternative transport. Services between Asia and North America are less affected. That is because many cargo airlines already fly via Anchorage in Alaska, a route that avoids Russian airspace.
European stock markets sagged on Tuesday as markets struggled with massive uncertainty caused by Russia's invasion of Ukraine. The pan-European Stoxx 600 index slipped around 2%. Early mining and oil and gas sector gains were outweighed by a steep drop in banking stocks on the sense that interest rate hikes might now get delayed. The index for Eurozone banks was down over 3% by early afternoon. Oil prices surged as concerns over supply disruptions and related sanctions outweighed talks of a coordinated global crude stocks release. Brent crude futures were up about 6% to almost $104 a barrel, and US benchmark futures also hit the $100 a barrel mark. Meantime, the ruble fell further on Tuesday while the dollar edged higher and the Swiss franc hit a 7-year high as investors sought out the safe haven currency. The Russian currency was down around 2% by lunchtime, trading at just above 99 per dollar, a day after it collapsed to a record low of 120 per dollar. Earlier on Tuesday, it had recovered some of those heavy losses, helped by an emergency rate hike by Russia's central bank. Still, the ruble was down almost 30% from its best levels this year. Trading on Russia's main stock exchange remains suspended.
Wall Street ended sharply lower on Tuesday, with bank stocks bearing the brunt of losses for a second straight day as the Russia-Ukraine crisis intensified, causing anxiety among investors and prompting Apple to pause all product sales in Russia. The Dow dropped nearly 600 points to finish 1.75% lower. The S&P 500 fell 1.5%, and the Nasdaq sank more than 1.5%. Chief Investment Officer at Cap Trust, Michael Vogelzang, said rising interest rates had benefited bank stocks earlier this year, but were now reversing course.
The bank stocks have been really sensitive on the upside to higher interest rates. As rates were rising earlier this year, bank stocks were doing really well because they respond to a wider net interest margin, so they can make more money on the spread that banks charge. So banks were a really important trade in the higher interest rate world. Today, given the risks that are going on in Russia and other places, we're seeing interest rates falling, and as a result, some of that same what's good for things on the upside are hurting them on the downside. So just simply the interest rate environment is a negative for banks. I think secondarily, with the potential chaos of the global financial system, what you're really seeing is the largest banks, the global banks in the U.S., get hit very hard, and of course, European banks are getting hit even harder. So I really think it's a combination of interest rates and the geopolitical risk that we're seeing.
Shares of Wells Fargo tumbled 5.75% on Tuesday, while the broader S&P Banks Index fell sharply as U.S. 10-year Treasury yields sank to 5-week lows. Chevron hit a record high, closing up 4% higher as oil prices surged on Tuesday. And at the end of the session, Apple joined a growing list of companies shunning Russia, saying it had stopped sales of iPhones in the country out of, quote, deep concern for the people of Ukraine.
As the fighting continues in Ukraine, Western firms are hastily rethinking their business in Russia. Now a steady trickle of departures from the country is turning into a flood. Shell is the latest big oil firm to confirm it's quitting Russian projects. That follows BP and piles pressure on rivals like ExxonMobil. Payment firms MasterCard and Visa say they have blocked transactions by Russian financial institutions. That is in line with international sanctions. Major car and truck makers are cutting off exports to the country. Volvo and General Motors are among those to make the move so far, though they are small players in the Russian market. Ford, which is a major player, hasn't fully spelled out its plans. Maersk, the world's biggest shipping company, on Tuesday said it would suspend all container movements to and from Russia. That follows similar moves by rivals including Germany's Hapag-Lloyd. Meanwhile, tech firms are restricting access to content deemed Russian propaganda. Facebook owner Meta says it will block state media outlets RT and Sputnik on its platforms in the EU. The moves mean big questions for companies that are yet to decide. French oil giant TotalEnergies said Tuesday that it would stop providing capital for new projects in Russia, but it stopped short of following rivals in making a full exit.